What is going on, y'all? This is Pay Me in Dividends, and today is August 30th, 2025. Welcome back to the channel. If you are new to the channel, I talk about income generating investments through the stock market. Now, it's been a while since I've posted a video. It's been about a month now since I've posted a video, and there's a reason for that. All right, I've switched up my portfolio in many ways. I still am focused on income, but I'm now looking at more of a hybrid approach in order to increase the value of my portfolio, therefore increasing the value of my net worth over time as well. And I just want to go over exactly kind of my mindset going into this and what really triggered the idea to switch to this new system. And so I'll show you exactly what I'm doing here. So I currently hold two ETFs in my portfolio, my main brokerage account. Now, this is the dividend tracker. This obviously isn't my actual brokerage account. Not a fan of really exposing my brokerage account to each their own, but I use dividend tracker. It's easy on the eyes. It's easy for you guys to see exactly what I'm holding. And as you can see, I have SPMO and BTCI. All right. Now, before I go over these two ETFs, I want to tell you guys exactly what my mindset is behind this two ETF portfolio. All right. So what I noticed is, just to give you guys a little bit of context, I've been investing now since 2020. All right. So it's been about 5 years since I've been investing. And, this is basically the amount of money that I've built up for myself over this 5 year period, outside of any retirement accounts or crypto accounts or anything. This is like my main brokerage account, and it's taken me about 5 years to build this. All right. Now, again, to give you guys a little bit of context, when I initially began investing, I was very hesitant as far as my contributions, because I was learning as I was going, right? I was building it as I flew. And, in the beginning, I was very hesitant because I was still trying to figure out how the stock market even worked. And as time progressed, I began to increase my contributions as I got more confident with the market. And basically, I tell you guys to tell you this, right? I've gotten to a point now where I realize that I need to really grow my portfolio. Granted, I've grown it now up until this point, but I need to really focus on growth because I'm still young, right? I'm 30 years old, and my goal here is not necessarily to retire early, but I do want to have financial freedom at an earlier age than traditional retirement age. But in order for me to do that, I'm going to need to increase my net worth. Therefore, to have enough money to put into income generating assets to be able to use that to pay for my expenses. All right. But you need to build the foundation first. And so this is why my approach has changed. And I've now introduced SPMO into my portfolio, and I've actually made it the majority of the weight in my portfolio. As you can see here, it's around 58% of my portfolio, and my plan is to increase that to around 60 to 70% of my portfolio at any given time. And you can see that BTCI makes up the rest of the portfolio. All right, so we're going to go over SPMO first. And I just want to give you guys a breakdown of what this is. All right. So this is an S&P 500 momentum ETF. All right. And we'll just look at what the website provides us, and then I'll give you a bit more context as far as the way I see it from my perspective. All right. So this ETF basically tracks the performance of stocks in the S&P 500 that have a high quote unquote momentum score. All right, the fund and the index are reconstituted and rebalanced twice a year, and they are weighted by their market cap and momentum score. So basically, what this ETF does is it takes it takes the S&P 500, and then it extracts around 100 companies in the S&P 500 that are showing a certain level of momentum. All right, so if we go down here to the holdings, let's go to the holdings so I can show you exactly what they're doing. Right, and this is my favorite part about this ETF is it's extremely diversified, and they really extract the best performers out of the S&P 500. Because you'll notice if you look at the S&P 500, the S&P is the metrics they use is really from a business perspective, as far as like market cap, how long a company has been profitable, things like that. But there are some companies in the S&P 500 that aren't really performance based. Now this ETF is more so performance based, which is what I'm looking for in order to increase the value of my portfolio, right? So if you look at the top holdings here, you can see, of course, we have Nvidia, we have Meta, Amazon, Broadcom. But what's interesting is you'll see JP Morgan in the top 10. You'll see Walmart in the top 10, right? You see Costco in the top 10. There's a lot of these ETFs that do not include these companies in their top 10 weightings, in the ETF itself, right? So, this ETF is really finding the best performers at that time and putting them at the top, right? They're prioritizing them so that the ETF can grow at a greater rate than a traditional S&P 500 ETF. And so if we go over here to Seeking Alpha, you can see the total return chart, and this is just a quick visual of how well SPMO has been performing, right? So if we look at the S&P 500 year to date, the S&P is up around 9.5 to 10%. SPMO is up 23% year to date. All right, now this fund is not a newer fund. It's been out since 2015, I believe. Let me just fact check myself because I don't want to be lying to you guys. I believe it came out in 2015. Yep, here it is. Inception date is October of 2015. So this is not a new fund, right? It does have a lot of historical data. So we're gonna zoom out to 5 years and look at the performance. So over the past 5 years, the S&P is up 84% in total return, which means that includes dividends as well. And SPMO is up 141%. So the SPMO has really outperformed the traditional S&P 500 itself. And so this is what really attracted me to this ETF, is basically they're picking the winners of the winners, if that makes sense. Now, a lot of people will say past performance does not dictate future performance, which I agree, but history does tend to repeat itself, right? So when you do have a good track record like this, from a reputable ETF issuer like Invesco, with a lot of assets under management. I believe this has over $10 billion of assets under management. It's been out for over 10 years now, or close to 10 years now, and their holdings are extremely, extremely solid. And the ETF is extremely intentional about what they do. They're here to bring performance to the ETF. They're not just invested in the S&P 500 and calling it a day. They're extracting the top performers from the S&P 500 in order to accelerate that growth. And this is the reason why I'm using it as the heaviest weighted ETF in my portfolio, because I really want to grow my net worth as I'm generating income. All right. Now, with that said, I still hold BTCI. All right. BTCI is from Neos. It is a Bitcoin high income ETF. It pays around 27% annualized yield on a monthly basis. Now, this is not keeping up with, yieldmax funds like OT or Misty, or some of the weekly paying Roundhill funds that are paying, 80+%. And what I like about that is it seems like they're not overextending themselves. And at the same time, they actually hold Bitcoin as a fourth of their underlying. All right. So you can see HODL, HODL, is an ETF from VanEck. It's a spot ETF, meaning it mirrors the performance and the price movement of Bitcoin. And so 24% of this ETF is in that spot ETF HODL, which means that as Bitcoin goes up over time, BTCI will catch a lot of that growth, whereas a lot of other high yield income ETFs are they either don't hold the underlying asset, they do 100% synthetic options, or if they do hold the underlying asset, they overextend themselves on the yield, so they're never able to actually catch any of that upside, if that makes sense. All right, let me know in the comments if that makes sense. I'm trying to kind of like dumb it down to where I understand it as well, because a lot of times you look at these websites and it can be a bit confusing. But basically what BTCI is doing is they hold a portion of their assets in a spot ETF that mirrors the performance of Bitcoin, and then they use the rest of the portfolio to do options on Bitcoin futures in order to generate this income. However, they're not overextending themselves with these crazy high yields. Granted, 27% dividend yield is still extremely high, but it's not the 50, 80, 100 plus percent that we see with other income funds. So again, it allows BTCI to have room to actually grow, right? So this is really my mindset now is, again, we'll go back here. I have 421 shares of SPMO, 610 shares of BTCI. And personally, my goal is to get SPMO to around 500 shares. I kind of like that even number, and allowing it to just run and grow and just kind of hold this forever, to be honest. I mean, or till further notice, right? And then BTCI, I'm not injecting any more of my money into BTCI, but I do have it on drip in my brokerage account, meaning the dividend reinvestment plan. So every single month when they pay out a dividend, it'll automatically reinvest right back into BTCI, but I'm not injecting any more of my money into BTCI. But SPMO, I will continue to put my own money into until I get to about 500 shares. And then I'll go from there and figure out what ETF I want to introduce to the portfolio next. Or I may just continue to dollar cost average into SPMO just to keep things simple. And the beautiful thing about this is BTCI at 610 shares, based off of their last payment, if we open up the calculator, they paid about $1.40 on their last payment, right? Times 610 shares. That still generates over $800 in 1 month, just in pure passive income, right? So it's still a yielding portfolio. My income is going to drop a lot. Before I had Misty, I had a few other income ETFs. I've been in and out of so many different income ETFs. I've had months where I've made $3,000, $5,000. Late last year, I tapped into some margin. I had a couple months where I made $7,000, $8,000. But again, I'm not on margin. I haven't been on margin for a very long time now. This is all, cash equity portfolio. And so I basically took one step back to move 2 steps forward. And I'm really focused on building this strong foundation in SPMO and possibly introducing some other growth ETFs into the portfolio as well. And then my plan going forward, maybe 6 months to a year from now, is to slowly introduce high yielding income ETFs into the portfolio again. But my mission at that point will be to keep the weight at a much smaller amount, whereas before almost 100% of this portfolio was high income ETFs, and I really wasn't capturing any growth. Granted, I was building cash flow, but I wasn't growing the portfolio's value. And so as I introduce income ETFs back into the portfolio in the future, I'm going to make sure to keep the weight, 10, 15% or lower, and allow SPMO to remain as the heavier weighted position in the portfolio so that the portfolio value can grow over time as well, right? Because I'm looking at the contributions I've made over the years. I'm looking at the performance of the actual market, right? If we just look at the S&P 500, let's look at the past 5 years that I've been investing, right? The S&P is up 84% over the past 5 years. And so the way that I look at it, if my portfolio is not at least keeping up with the market, with the S&P 500, it really doesn't matter how much cash flow you're making. You're kind of hustling backwards at a certain point, right? Cash flow is great, and that is my ultimate goal, but you got to have money to make money. And what I found myself doing is I was trying to squeeze as much yield as possible out of a small portfolio instead of focusing on building the principal. And then once I'm at a point where I have $300,000, $400,000, $500,000, $600,000, then I can dedicate a bigger portion of that portfolio to higher yielding assets while still having that strong foundation intact. You know, whether it's SPMO, QQQ, VOO, SCHG, you know, any of these, index ETFs or growth ETFs should be the core foundation of your portfolio, because when the market goes up almost 100% over 5 years, if you're not capturing any of that growth, it can be a bit frustrating, right? So anyways, that is my plan moving forward. I'm really trying to increase the value of my portfolio and my net worth while still generating income, all right? And again, in the future, as I move along and I begin to introduce income ETFs back into the portfolio, these are some of the ETFs that I'm going to use, right? GPTY, which I've held before. I recently just sold off my GPTY position to put it into SPMO. But in the future, I would like to reintroduce, income ETFs like GPTY, possibly MAGY. MAGY is the Magnificent 7 covered call ETF from Roundhill. And there's plenty more other ETFs, high yielding income ETFs that I like, but I'm going to slowly reintroduce them back into the portfolio over time. And I'm going to make sure that they remain a smaller weight than they were before, so that I can really capture that growth. All right. So that's just a quick update for anybody who's watched my channel before. You've kind of seen the progression of where I've gone, the increase in value of my portfolio, the ups and downs, the ebbs and flows of the market. You've seen months where I've made, a few $1,000s, and now you're going to start to see months where I'm kind of building it back up, right? Because I'm trying to build this strong foundation, because I want to be around for a while, right? I want to be around for a while. I want to be able to actually generate real wealth, as they say, right? And I don't want to just, be trying to squeeze as much juice out of a small portfolio without ever actually growing, right? So you guys let me know in the comments. Are you guys familiar with SPMO, this S&P 500 momentum ETF? What do you think about it? What are your strategies when it comes to income investing? I know some people like to generate extremely high yields and then use that income to feed growth ETFs. I'm kind of doing it the hard way, but I think this will build discipline. I think in the long run, building this strong foundation will really allow me to be grateful for the money that I create from this portfolio in the future. So you guys let me know in the comments, what do you think? And I'll try to keep you guys updated a lot more often from here on out. And as always, I appreciate you stopping by the channel, and I will catch you in the next video.